Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 9th of March 2019 and we're providing our gold and silver weekly update for the week ending the 8th of March. Gold rose $7 last week from $1,292 to $1,299, having hit a high of $1,300 and a low of $1,282. In sterling terms, gold finished the week at £998, that's up £20. And in euros it closed at €1,156, that's up €19. Silver rose 13 cents, from $15.21 to $15.34, having hit a high of $15.37 and a low of $15. In sterling terms, it closed at £11.78, that's up 26 pence. And in euros, it closed at 13.65 euros, that's up 0.27 euros. The gold to silver ratio fell slightly from 84.9 to 1 to 84.7 to 1. The Dow Jones closed on Friday at 25,450. Down 22 points on the day and down 576 points on the week. And the NASDAQ closed at 7,408, down 13 points on the day and down 187 points on the week. And the S&P 500 closed at 2,743, down 6 points on the day and down 60 points on the week. Brent crude rose 69 cents from $65.05 to $65.74, and US light crude rose 27 cents from $55.80 to $56.07. The dollar index stands at 97.03, that's up 0.78 on the week. In last week's report, we pointed out that the important day to watch out for was Friday, because of the non-farm payrolls, and boy did that prove to be the case. As we mentioned, quote, "We can see some movement in anticipation of those figures on Friday," unquote. Well, in actual fact, the movement really occurred immediately after the figures were announced. All week, gold prices were subdued, gradually heading low, and then for a couple of days consolidated. But come Friday's jobs report, it changed, and we saw an immediate rise of around $15 shortly after the announcement. Now, in the overall scheme of things, that wasn't a huge rise in price, but the reversal was noticeable. Non-farm payrolls rose by just 20,000 jobs in February, while expectations were for a rise of 185,000. Now, we suspect these figures may be amended next month as we feel they are too low, but they do follow an unexpected rise in January of 311,000, which was further extended by another 7,000 jobs on correction. So the 2-month figures are not that poor at all. In addition, the unemployment rate fell by 0.2% to 3.8%, and the average hourly wage grew at an annual rate of 3.4%. For those critical of government figures and statistics, we draw your attention to something called the U6, which many regard as the real unemployment rate because it includes those holding part-time jobs and discouraged workers, and that rate fell from 8.1% in January to 7.3% in February, an 18-year low. So, we saw on Friday a weakening of the US dollar, though it has been high all week and still closed at a higher level than the start of the week, despite Friday's fall. From a technical point of view, resistance for gold is seen at $1,302, which represents the 10-day and 50-day moving average, and some reasonable support at $1,275. Analysts are predicting that gold could in fact rise back up to the $1,325 level this week, and we too can see that if the dollar maintains its weakening, though to be fair, we don't see much on the horizon to support other countries' currencies making much advancement against the dollar either. It could very well be the case that the initial reaction could indeed be just that, and we would not be surprised if after an initial rise on Monday morning, prices fell back again. Silver followed a similar pattern to gold, and the charts are almost identical. Silver did, however, find considerable support at the $15 level, and technical analysts suggest a hammer has been formed, which is positive. We envisage a small follow-through on Monday, with silver prices rising a little further, but frankly we need to be convinced that this too will hold. We are already witnessing rumours in the marketplace that the Fed may be lowering interest rates soon, but frankly we have to disagree. Stock markets are robust at present, and the dollar's level is not adversely affecting industry, and in fact is making imports relatively cheap still. So unless we get another month of very poor jobs data, we think rates are going to remain where they are, at least for the next couple of months. What we can foresee, however, is a further weakening of the euro against the US dollar, and if this occurs, it generally has an adverse impact on precious metal prices. Also, a number of major banks tend to agree with us, especially since the European Central Bank's president, Mario Draghi, said on Thursday, quote, "There was a sizable moderation in the pace of growth last year, and this has carried over into 2019. As a result, the bloc's economy will be slower in producing the expansion necessary for inflation to return sustainably to its target of close to, but below 2%. He then acknowledged that rates will remain where they are, until at least through the end of 2019, even though the previous guidance suggested a hike could come in autumn of that year. So, against this backdrop, we cannot foresee the euro strengthening against the US dollar much further than it has already. Also, we have to bear in mind that further reports of a global growth slowdown will undoubtedly impact the demand for silver at the industrial level, and therefore there would have to be a much stronger desire for it at the monetary level to compensate. But if this too is affected by the strength of the US dollar for the next few months, we cannot see where silver will get its impetus from, and frankly may even see a GSR, gold to silver ratio, rise as high as 90 as an outlying possibility. We doubt it will quite reach that level, but it is conceivable. So what do we have on the economic calendar for next week? Well, on Monday we have the retail sales for January. Tuesday, consumer price index and core CPI for February. Wednesday, the producer price index for February. Thursday, import prices for February. And Friday, the industrial production for February and consumer sentiment for March. So in conclusion, whilst we envisage a slight rise in gold and silver prices early next week, we cannot see what may happen to continue the trend, and if anything can see more, certainly as of today, to witness a further pullback. Not a significant one, as we still believe that both gold and silver will operate within the trading ranges we have mentioned in previous weeks, but we are a little more pessimistic silver than gold, even though the gold to silver ratio is at a level where the opposite should be the case. So we're going out on a slight limb with this prediction. Meanwhile, we hope you have a most prosperous week ahead. And for silver members of our Inner Sanctum, just a reminder that we have our membership webinar later today. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.